Tesla, NIO, which is the better stock to own? This video will give you the answer. I hope that intro's got you pumped up. Electric vehicles accounted for 10% of global auto sales in 2022, and that number could quadruple by 2030. So there's an enormous amount of total addressable market, lots of room for growth, and of course, opportunity for you to make money by investing in the EV sector. But which is the better stock to buy, Tesla or NIO? This video is going to compare the two companies and tell you which is the better stock to own. And later in the video, I'm going to provide some very interesting and unique insights into the US automotive market, specifically regarding the expansion of NIO to the US market. Let's start with a brief background of each company. Did you know that inventor Nikola Tesla was the inspiration behind Tesla's name? And the Chinese name for NIO means blue sky coming. Also, in 2018, the NIO ES8 set a world record for the highest altitude reached by an electric vehicle as it ascended a glacier in Tibet. And in that same year, Tesla CEO Elon Musk launched his cherry red Tesla Roadster into space. This was a stunt for SpaceX's first launch of its Falcon Heavy rocket. Driven by Starman, a mannequin decked out in SpaceX's signature spacesuit, the car is still circling the cosmos. Let's do a side-by-side comparison. So Tesla on the left, NIO on the right. Tesla, the world's best-selling electric vehicle automaker focused on AI, self-driving cars, alternative energy, an iconic culture, and really a diversified green energy technology company. NIO is an innovative Chinese EV manufacturer focusing on autonomous driving, AI, innovative battery technology, and batteries-as-a-service solutions. You can even lease batteries from NIO. Both are iconic companies and they have cult followings. Tesla was founded in 2003, NIO in 2014. Electric vehicles sold in 2022. Tesla sold 1.3 million vehicles. That was up 40% year over year. NIO sold 122,486 vehicles. That was up 34% year over year. You can see the number of employees. Tesla dwarfs NIO. 127,855 to 15,204. Of course, it's a smaller company. And Tesla was headquartered in Palo Alto, California, now in Austin, Texas. NIO, Shanghai, China. And you can see the electric vehicle and product lineup at the bottom. Tesla not only has electric vehicles, but also solar roofs, solar panels, and power walls. And NIO has an excellent customer ecosystem, including NIO houses. And both of these companies have talked about creating cell phones that work better with their vehicles. So that data helped give you a quick snapshot to compare the companies side by side. And later, I'm going to do another side-by-side comparison to compare growth metrics and financials. From a high level, what are the main differences between Tesla and NIO? Let's compare company focus. The primary differences between Tesla and NIO really come down to the user experience, vertical integration, offerings, and battery technology. NIO has really focused on building an ecosystem for its customers, with benefits such as NIO houses, free battery swaps, and more. NIO has built a strong sense of community around its product and its brand. The company has hired popular Chinese singers, Norwegian DJs, and more to bring in customers to sell more cars. Both of these are iconic electric vehicle companies, and they have cult followings. And I'd be willing to bet that you've already picked a horse in the race before you watch this video. I encourage you to try to keep an open mind and understand that I'm simply trying to provide facts and analysis to help you with your investing decision. In the end, the decision, of course, is ultimately up to you. Many people would argue that NIO's lower-end models focus more on quality and that it's more of a luxury maker. Of course, both make higher-end cars, but some would argue that NIO is more focused on the quality of all of their products and all of their models. NIO also focuses on battery swapping technology as well as battery as a service. You can lease batteries from NIO, so you can buy a car that doesn't have a battery. And of course, that makes the car less expensive and it provides benefits to the owner. If the battery goes out prematurely, they're covered. Did you know that Tesla once planned to do battery swapping stations itself, but it abandoned the idea for fast charging stations, their supercharger network. Are you curious as to why? I'll get to that soon. And don't get me wrong, there are tremendous benefits of battery swapping technology, especially at the new swapping stations where you can swap a battery in 3.5 minutes. But will that approach work everywhere? And at what cost? I'll break that down later. Tesla is more vertically integrated and continues to press the envelope in that area. NIO relies on subcontractors to manufacture its cars, whereas Tesla is focused on manufacturing the vehicle from top to bottom, which increases margins. Tesla even acts as a fabless semiconductor company. So like an NVIDIA or AMD, where they design chips and they send those off to foundries to get manufactured. Tesla designs both its FSD and Dojo chips in-house using IP cores and EDA. And things like this really can drive the bottom line and really increase margins and profitability. Tesla even offers insurance to their customers, and it's always looking to expand its integration as well, with talks of lithium mining and more. Vertical integration and complete control of manufacturing has its perks, especially in the United States. And remember, a lot of people like to compare pricing, and NIO often has an advantage in that area, but it really depends on where you live. For example, Chinese imports to the US currently have a 25% duty, and NIO has discussed building a factory on US soil to avoid most of those fees. More on this later when I discuss the United States specifically. So as we discussed, Tesla is more vertically integrated, but it also has more offerings. Tesla offers solar roofs, solar panels, power walls, and more. I call Tesla a green energy conglomerate, and they're working on many areas, and they're really focused on AI, even talking about building a robot called Optimus. So while both NIO and Tesla do have an AI focus, I would consider Tesla the leader of the two when you think of artificial intelligence. And many of you I know disagree, so I'd love to hear from you in the comments below. This will also be controversial, but many people believe that Tesla, at least historically, has had superior battery technology. But NIO has been making huge strides in this area. In fact, the 2023 ET7 has a range of up to 1,000 kilometers. That's over 621 miles. So next, I want to provide some insights regarding NIO expanding here to the United States. First, let's discuss battery life in cold weather. Now, this is going to ruffle a lot of feathers, but hear me out. I live in a colder climate. I'm in the north central part of the United States, and I have lots of friends and family who own Teslas as well as other electric vehicles. The fact is, cold weather impacts range significantly, and it doesn't matter if it's a Tesla or a NIO. And I know some of you are watching this shaking your head right now and you don't believe me. Fact, current EV battery tech loses 50%, up to 50% off ranges in freezing temperatures. Now, when I talk about freezing, I'm talking about very cold, so hold on. This is a problem that's not discussed and needs to be fixed. And I do think that disruption needs to happen when you think of battery tech. So of course I get a response. Funny, I've been through 3 harsh winters in New York with my Model Y and I barely noticed any loss, if anything 10%. Can't speak for other manufacturers, but I'm sick about hearing this false information. It's not false. It's just not as cold there, and you're likely not driving long ranges, so you don't notice. One of our members in our Discord community, his name is Derek. He is a huge Tesla fan, a huge Elon Musk fan. What's up, Derek? He just bought a brand new Tesla, and he experiences 50% losses in extreme cold. He even talked about it himself on a podcast. When this video is done, there's a link below, and go check that out. And here's another reply. Tests were run on a bunch of different brands. Tesla's lost 15%. And I replied, this supports what we've already discussed. The tests are not run in Midwest winter temperatures. I'm talking about extreme cold. And these tests are not doing that. These tests are for EVs comparing temperatures to 70 degrees Fahrenheit to 20 to 30 degrees Fahrenheit. 20 to 30 is not what I'm discussing here. As a quick example, Minneapolis experiences 20 plus calendar days that are below 0 degrees Fahrenheit. This is where that mileage drops off fast. And I know with certainty, I've got viewers right now in Nordic nations, Norway, Iceland, Sweden, Denmark, Finland, and you're probably raging right now. Your countries have the highest EV adoption in the world, and it's not even close. But please let me give you some perspective. Let's use the number 1 country, Norway. Norway has 81 EVs per 1K residents, and that was in 2020, so that number is higher now. The United States is about 30 times larger than Norway. And so when you think about visiting family family here in the Midwest. My wife is from Montana, and sometimes we drive 1,200 miles just to go visit family. That's something that you might not experience in European countries, especially if you're in a country like Norway. Norway is really the perfect place for EVs if you think about it. Over 83% of the population lives in cities. So these people drive very short ranges to work and so on. They're not driving across several states or countries. Now, the United States has around 80% of people living in cities as well. And EVs definitely are a great fit, especially if you live in the city and you're not driving long distances. It makes sense. But the United States has 332 million people, and Norway has 5.4 million people. So that means the United States has 56.4 million people living in rural areas. The entire country of Norway only has 5.4 million people. So we have 10 times more people than that just in rural areas here in the US. And to give you perspective, Norway has about 918,000 people that live in rural areas. But the United States is massive in comparison when you think of land mass. And it has a huge and complicated interstate highway system. So oftentimes, even urban dwellers are driving pretty far to get to work. They might live in tier 3 suburbs and have to drive over an hour each way to get to work. So really, when you compare the US EV market versus, say, Norway, it's really apples and oranges. And I'm not trying to say anything bad about EVs whatsoever, so hold on. The reason I'm sharing this, the point behind it, is to really get to the core of why NIO is going to have challenges in the United States. And really, battery swapping will not work. Remember, Tesla already tried it. Battery swapping will not work in the United States for several reasons, including the size, the massive size of the US, its rural areas, as well as that cold northern climate that we discussed. And this will probably also upset a few viewers, but this is fact. If NIO does come to America and you buy a NIO, many owners are going to find themselves charging their NIO electric vehicle at a Tesla supercharging station. So if you're not aware, NIO doesn't have to use battery swapping stations. You can charge the battery as well, but their battery tech is not focused on that. And keep in mind that not all Tesla charging stations are open to non-Tesla vehicles yet. Tesla has a massive charging network infrastructure in the United States, as well as globally. Tesla has over 17,000 charging stations in the US, which can add up to 320 miles of range in 15 minutes. And that's according to the company's website. Tesla's charging network, especially in the United States, is unparalleled, unrivaled, and nearly impossible to penetrate. And I'll explain why. To provide some perspective on this, Tesla's superchargers cost 1/5 of the competition to build, as low as $30,000 per charger, where most of the competition is asking for $150,000 a charger, and in some cases $200,000 per charger. That's 5 to 7 times the price. This goes back to that vertical integration and first mover advantage, especially in the US. If you remember on the previous video, this is a follow-up to a video that I did on NIO. Battery swapping stations cost about $500,000 to build. Now the new ones are $250,000. Plus it costs $1 million a year to maintain one. The cost, the time, and the scale to build out a battery swap network in the United States, it's an impossible challenge. Now I get questions a lot about, should I invest in ChargePoint or EVgo? So these are the type of companies that Tesla has been competing on, and they're trying to charge $150,000 per station versus $30,000 from Tesla. Nobody even comes close to Tesla on these prices. And Tesla already knows that battery swapping won't work in the United States. Remember, they tried it already. They went down that path, and they realized pretty quickly that battery swapping was not the answer in the US. For some perspective here, Tesla can build 16 supercharger stations for every single NIO battery swap station. Now for the new models, it would be 6 or 7 superchargers to 1. But this doesn't even go down the rabbit hole of relationships, contracts, and the amount of years invested to build out this infrastructure. If you really dig into this, the task is absolutely daunting. And remember, what's good and what's convenient for you as a buyer, a consumer, someone that owns the vehicle, it doesn't always correlate well to what's good for investors. So you might love the car, but we're talking about this from an investor perspective. Which stock should you buy? Now hold on, because I'm not done yet and you might be surprised at my final answer. But if you were to ask me, which EV should I buy if I'm in the United States? The answer would be Tesla, and it's really not even close. And I'm talking about all of them, Ford, GM, everybody. Tesla has that infrastructure built out. They've got vertical integration, and it's gonna be really hard for anybody to come close to it. It really is. And I'm not even gonna go down the rabbit hole of AI and what it's gonna take for other companies like Ford and GM to come close when you think of autonomous driving. Now, I do think that NIO is strong in this area, so I give them credit for that. So absolutely there is competition, and it's a threat for both NIO and Tesla. These legacy automakers are spending billions of dollars to try to get a piece of that EV pie. And don't get me wrong, I know that NIO and Tesla both have cult followings, and some of you are probably upset watching this. But this analysis does provide great perspective from the US market specifically. So as an investor, if you're invested in NIO right now, I'd be careful what you ask for. Building a factory in the United States, think about the obstacles it's going to face. Remember, NIO does not have the experience that Elon Musk and Tesla does when you think of manufacturing. And NIO's not vertically integrated. Watch this quick clip from Elon Musk.
I lived in the Fremont and Nevada factories for 3 years, fixing that production line, running around like a maniac through every part of that factory, living with the team. Yeah. I slept on the floor so that the team who was going through a hard time could see me on the floor, that they knew that I was not in some ivory tower. Whatever pain they experienced, I had it more.
So sure, building a factory in the US would help them avoid the 25% duties. But then you're gonna have to pay US labor rates versus Chinese. And that's really, if you think about why NIO products are cheaper, it comes down to the labor cost. And those higher wages are gonna eat into margins even worse than we've already seen with some of their margin compression. So when you see articles about how NIO is cheaper, it's really not a good comparison because those stats are using prices with Chinese labor. They're not real costs in the US. So you can build a factory here and avoid the 25% duty, but then pay a lot more for labor, or you can get cheap labor and pay the 25% duty. No matter how you slice it, Tesla is going to have the advantage here when you think of margins. And again, this is specifically the United States. And if you buy a NIO in the US, you're probably going to be using a Tesla supercharger to charge it. Let that sink in. Okay, hold on. Be patient here. I'm trying to give you perspective. I'm trying to be honest, and I am doing everything I can to be neutral, but that information there was simply fact about the US market. With all that said, China is the largest EV market in the world. So I'm not saying that you shouldn't buy NIO stock just because of the US. I'm simply providing insights to the US market because it's where I live and it's what I understand the most. And a lot of the viewers that are watching this, you're not on US soil and you might not have those insights. And another fact here that's probably going to ruffle feathers, but again, it's fact. Many Americans will not want to buy a Chinese car or invest in a Chinese company. I'm not saying all, and I'm not saying that NIO couldn't do well in the United States, but I think if they're trying to build out their whole ecosystem, they're going to have challenges. So NIO would have to be selective and build out their network in select cities, in larger cities like Los Angeles, New York, Chicago, but they would not have an ecosystem that would span the entire US like Tesla, which would give them a disadvantage. And I'm not here to upset you. I'm really not. I'm here to provide facts for investors. But let's keep digging because I have not gotten to my final conclusion or my verdict. You're going to want to see it. Is it possible to own both of these stocks and make money? Let's find out. Next, let's break down financials and delivery metrics. Then I'll give you my verdict and tell you which stock you should own. All right, so this is pretty cool. I put this together for you comparing the two companies. It has revenue, it has deliveries. On the left, Tesla, the right, NIO. So if you look at Q4 revenue and compare, Tesla had $24.32 billion in revenue. That was up 37.2% year over year. NIO had revenue of $2.33 billion. That was up 62% year over year, but it missed by $230 million. And Tesla was in line. For EPS, of course, Tesla is profitable. It actually beat by 8 cents with $1.19 in EPS, whereas NIO was negative 44 cents and it missed by 21 cents. And the big thing here is margins, as I told you in the last video. You look at Tesla, they had 25.9% margins. NIO only 6.8%, and that was down big from 20.9% in the fourth quarter of 2021 and 16.4% in the third quarter of 2022. So a significant decline in margins, and they're going to have to get those margins back up. Electric vehicles sold, this is total for 2022, this is sold. Tesla sold 1.3 million vehicles, up 40% year over year. NIO sold 122,486, up 34% year over year. Revenue, $81.5 billion, up 51% for Tesla. NIO, $7.14 billion, up 36%. So you can see that NIO is much smaller, but they're really in different stages because NIO is a much younger company. And you can see the Q4 delivery numbers numbers on your screen. Now, we just got breaking news for both of these companies just today, yesterday. Q1 2023 deliveries. So Tesla had 422,875. It actually missed slightly from expectations, but it was up 36% year over year, and they had production of 440,808. For NIO, it came in at 31,041, and their estimate was between 31 and 33K. This is down 20% sequentially. So you're seeing both margin compression and a decline in deliveries for NIO. All right, this will be really helpful. I'm going to compare these side by side. You can see Tesla's trading at 195, NIO at about 983. 52-week performance. Tesla's down 42%, NIO's down 50%. A lot of you might be surprised to see that. Earnings per share TTM, Tesla 362, NIO negative $1.01. And revenue 81.5 billion for Tesla, 6.5 billion for NIO. Market cap, Tesla of course much larger, $656 billion versus 17.6 billion for NIO. Earnings per share growth, Tesla positive 56%, NIO negative 28%. And as you can see, Tesla's cash flow growth for the last 3 and 5 years has been really impressive. So here's your long-term debt and equity, Tesla on the left, NIO on the right. Pause your screen if you need to. Price to sales ratio, Tesla is actually much more expensive at an 8, NIO at 2.67. Now since Tesla is profitable, it has a PEG ratio and it's expensive, 4.85. And Tesla currently has around a 53 PE ratio. Next year's estimate, 37.9. And price to book, Tesla's almost a 15 and NIO's just over a 4. So in conclusion, what's the better stock to buy now? And what's the better stock to own long term? When I compare Tesla and NIO, I really think about how each company are in different stages of their life cycle. For NIO, it's hard not to focus on their cash burn. They're really burning a ton of cash to sell cars and build out their ecosystem, but that could pay off long term. Tesla, on the other hand, does very little. It doesn't really advertise, but yet they still sell cars. For some perspective on this, NIO has 375 NIO houses and NIO spaces in 141 cities, as well as 1,300 of their battery swapping stations. And remember, what's great for you as a consumer is not always great for you as an investor. When money was flowing and it was cheap, when interest rates were low, growth stocks were in high demand, and investors flooded into names like Tesla and NIO. And these stocks got pushed to nosebleed prices way ahead of themselves in the pandemic. And both of these companies do have risks to consider, including competition, raw material costs, supply chain disruptions, regulations, product liability claims, product defects, user adoption of EVs, and more. For NIO specifically, I think of cash burn, decelerating growth, highly impacted margins, and in truth, less investors wanting to own Chinese stocks. For Tesla, you have some of the same concerns, but the primary one that really sticks out to me is Elon Musk's erratic behavior, which some people just don't like. And this has impacted Tesla's reputation, especially when you think about the whole Twitter soap opera. On the positive side for Tesla, Elon Musk does have 133.5 million followers on Twitter, and he could really use that platform to advertise for free across the globe. You also have to consider the Inflation Reduction Act, which includes tax incentives for US buyers. And then you think of margins, that vertical integration, price cuts recently to compete, Cybertruck on the way, semi-trucks on the way, and more. And for NIO, it has an excellent customer ecosystem, and the company's expanding to 25 total countries and regions by 2025. It's also looking to be profitable as soon as next year. Remember, it took Tesla 16 years to become profitable, and NIO was founded in 2014. So profitability by 2024, assuming that happens, would only be 10 years, which is 6 years faster than it took Tesla to reach profitability. Now, this could be looked at as a pro or a con, but NIO had a 136% year-over-year increase in R&D, research and development. And this is for advancements in technology to stay up with the competition, as well as offer more perks for its customers. So it's a pro and a con because it is more cash burn, but it's also growing the business for the future. NIO is also projecting 250,000 sales in 2023, which seems unlikely considering their delivery deliveries for this quarter were 31,000. But that's what they're telling us, and it's possible. Plus, NIO has several new models on the way, and the company's really doing a lot of exciting things. In fact, there are many reasons to be excited about both Tesla and NIO. Although, of course, both do carry risks that you need to consider as an investor. I want to share one last stat comparison here before I share my verdict. Net income per employee. Tesla makes over $98,000 in net income per one employee. NIO has a cash burn of over $106,000 per employee. So positive 98,000 versus negative 106,000. And this speaks volumes in terms of where each of these companies are within that life cycle. We think of a growth stock. It starts as a spec stock, goes to hyper growth, then growth, mature growth, and so on. NIO is a younger company, and it's experiencing a lot of the same growing pains that Tesla already went through. So this is really going to depend on your risk tolerance, how young you are, your time horizon, and so on. If I were personally to pick one stock, it would be Tesla, but I do believe that NIO is something to consider for long-term investors who have a healthy risk appetite. There's a chance that NIO could be profitable next year, and Tesla struggled as well and faced bankruptcy several times, so it's not fair to rule NIO out. And when you think about other US companies like Lucid and Rivian, NIO is much more established than they are. So I think that you could own both of these stocks, Tesla as a growth stock and NIO as a spec stock. And if you have not watched the first video, go back now and watch that because I explain what I'm talking about here. A spec stock could be a 10x or 0 type return. Now I know that some of you have disagreements with what I've said today, and I want to hear from you below in the comments. And if this video was helpful, please make sure you subscribe to the channel. Click that bell for notifications. I'm trying to grow this channel to over 40,000 subscribers in 2023, and you can help me out today. Also, please drop a like and a comment. It helps out the algo. I appreciate your time and attention. Have a great rest of your day. Take care.